Cathie Wood, the CEO behind Ark Invest, has begun to place her bets on the nuclear energy revolution. The Ark Autonomous Technology and Robotics ETF, or ARKQ, has recently purchased around $2.4 million worth of shares in Oklo, a nuclear energy startup. So it seems Cathie has chosen her horse to bet on for the upcoming nuclear renaissance. I covered this stock briefly in a previous video explaining why nuclear stocks were skyrocketing recently, but in this video we'll discuss Oklo in greater detail, reviewing the company's fundamentals and potential issues I think it might face in the future. Cathie Wood has made various investments in artificial intelligence, and buying stock in Oklo is likely a proxy investment based on that belief in AI. The energy demands of the data centers used for AI are growing rapidly, and the tech industry is pushing nuclear energy as a potential solution for providing reliable baseload power to meet rising demand. We'll touch on Oklo's management later in the video, but Sam Altman, the CEO of OpenAI, is also the chairman of Oklo and sits on the board of directors. So having a personality like Sam Altman on the board likely opens up a variety of opportunities for the company. To provide some context, before discussing Oklo's technology, we must first define what nuclear reactor types are even out there. A large conventional nuclear reactor that we can all think of typically generates 700 megawatts or more. A small modular reactor is smaller in scale, at around a max of 300 megawatts, and modular, so they can theoretically be mass-produced, because reactor components can be pre-assembled. And lastly, there are also micro-reactors, which could generate around 10 megawatts of power, which would be so small that they can fit in a truck and be transported around in some cases. Oklo is developing what could be defined as micro-modular reactors. They only expect their reactor design to provide around 15 to 100 megawatts of power. Their tech is based on the experimental breeder reactor 2, designed by the US government and operated from 1964 to 1994. It was a 20 megawatt design with inherent abilities like localization to the power grid and commercial demand, flexibility to use fresh or recycled nuclear fuel, increased safety measures, and competitive operating characteristics. The Aurora powerhouse, Oklo's reactor technology, is designed to primarily use non-nuclear supply chain components, which will allow them to reduce costs, and spinning up the nuclear industry in the United States will take time to do. In a direct comparison to traditional nuclear reactor technology and business models, Aurora is estimated to cost less than $60 million to build, compared to potentially billions of dollars for larger reactors. Other benefits include low land usage, proximity to customers, fewer parts needed, passive safety systems so the reactor can safely shut itself down without human intervention if something goes wrong, and a manufacturing timeline of less than 1 year. These various benefits allow for lower capex investments, so Oklo has decided to build and operate all of their reactors themselves, so it doesn't need to license out its technology like the other public nuclear startups do. Oklo also wants to sign long-term electricity generation agreements with companies near the reactor locations. So looking at the unit economics, the first-of-a-kind 15 megawatt reactor would cost approximately $70 million to build. After that, economies of scale would start to kick in, and they would expect the reactors to cost around $57 million to build. Annual revenues would be $13 million, and expenses would be $5 million or lower. Annual cash flows would come out to around $8 to $10 million, and the 50 megawatt reactor would be similar, but just larger in size and energy output, of course, so revenues and ultimately cash flows would be higher. Oklo also includes a cash flow sensitivity model based on the number of 15 or 50 megawatt reactors being deployed. Once Oklo deploys around 10 reactors of either variation, you start to cross over into that $100 million and above cash flow range, which would be great to see, but it will take a significant amount of time to get there because their first project will likely get built with the Idaho National Laboratory in 2027. Now, I wouldn't be surprised if that ends up extending later as well. Timelines tend to get stretched with larger scale projects or supply chain situations like Oklo, so I would bake that into any investor expectations. As we know, anything that involves the government almost always leads to delays. I don't make the rules, that's just how it is. Oklo has a total pipeline of 1,350 megawatts of non-binding letters of intent for reactors across 6 states. Potential customers include Centrus Energy, Diamondback Energy, Wyoming Hyperscale, Equinix, and the United States Air Force. The US is actually trying to help companies like Oklo with regulatory problems with the ADVANCE Act. As Oklo points out, the main goal of that bill was to reduce regulatory costs and timelines for licensing new nuclear reactors and their designs. Oklo estimates that the new legislation will cut down both timelines and fees by 50%. There's also the potential to receive some financial rewards that would reduce costs further. Additionally, around $900 million in funding was allocated to SMR technology in another bill, and the Inflation Reduction Act provided various benefits to the nuclear industry. The IRA provided $700 million in funding for nuclear fuel, $250 billion to the Department of Energy loan program, and potential tax credits as well. The funding for SMRs will likely not apply to companies like Oklo, since their reactors are more like microreactors in size, but there are other opportunities for subsidies. Another benefit of Oklo's technology is that their reactor design can actually use recycled nuclear waste as fuel. Beyond just use in their reactors, Oklo is pursuing spent fuel recycling as a separate market vertical to generate additional revenue. The company's design plans for a recycling facility have been submitted to the Nuclear Regulatory Commission, so this is another avenue for additional upside that other public companies in the space aren't pursuing. If Oklo successfully builds some fuel recycling facilities, the Department of Energy could provide various financial rewards to help with funding, so that could help with building out those facilities as well. Moving on to the management team, the co-founders Jacob DeWitt and Carolyn Cochran received either PhDs or master's degrees in nuclear engineering at MIT. At that point, they started Oklo and have been working on building up the company for over a decade now. As I mentioned before, Sam Altman is on the board, which could lead to interesting connections in the technology space, and the board of directors have executives in the energy, electricity, or military backgrounds. Out of the current 88 employees, 12 have PhDs, and 36 have at least a master's in engineering or science. So around half of the workforce has an educational background in a related field. Now, of course, regulatory experts and former NRC staff have also joined to help with the regulatory work with the US government. With that said, I'm not sure they have experienced members who have built a nuclear power plant or been involved in those projects in some variety. Ideally, you'd like to see that level of expertise in a company like this, but that doesn't necessarily mean they won't succeed. Some of the lower level employees could have that expertise, but I'm just going off of the upper management here. For some context, Oklo went public via a SPAC merger with Alt-C Acquisition Corporation, which put the company in a great financial position. Including cash and marketable securities, Oklo has around $300 million in total assets, so they won't need to raise money for quite some time. Oklo expects their burn rate to be around $40 to $50 million in 2024, which is $20 to $30 million more than what they thought it would be in 2023. Their total shares outstanding is around 122 million. 55 million of those shares are under varied lockup periods. Important insiders are locked up for 3 years, with many of the VC investors locked up for 180 days. Those shares will be free trading in November, since the SPAC business combination closed on May 9th. That will be a month to watch, as those shares could potentially hit the public markets. Now, the shares under a 3-year lockup period could also enter the markets early if Oklo hits triggers at $12, $14, and $16 for a third of the consecutive trading days in an approximately 2-month period. Again, that's another aspect to consider and look out for. So in summary, we can see why Cathie Wood would start to pick up shares in Oklo. They're the closest of the 3 public nuclear reactor startups to building a potential plant with a timeline for 2027. Their design is less capital intensive than your average small modular reactor, since they went with a micro design. They're cashed up with $300 million in the bank. Sam Altman's involved, that's always a plus. And there's bipartisan support for nuclear from the US government. So I can see why ARK would choose them. It's the best of the 3 public options. Now, with that said, I fear that the company will face the same issues I mentioned in my last video on these nuclear reactor companies. Oklo is already spending around $50 million annually, and those costs will likely only increase over the next few years. Yet they already doubled what they expected over the last year. I would be surprised if they managed to build their first facility in Idaho on time and on budget. But even if we do go off their timelines, then it will take Oklo at least 3 years to generate any real revenues. Yet that assumes everything goes smoothly. We also have to hope there aren't any lawsuits that slow down progress even further. The environmentalist crowd could do whatever they can to try to stop Oklo from building a new reactor once they hear about it. The not in my backyard or NIMBY crowd could be a problem for companies like this. So of course, make your own investment decisions, but those are my concerns. I might consider taking another look at the company in a few years, but I feel no need to take a stab at Oklo with any significant catalyst likely years away. If you'd like to receive regular coverage of news events and other investment opportunities in green markets, then subscribe to my newsletter on Substack, link in the description. Thanks for watching.